Okay, welcome everyone. Welcome everyone to today's Associates Meeting at the Stanford Institute for Economic Policy Research. I'm Mark Duggan, the director of SIEPR, and it's really great to see all of you here for what I think will be a great conversation with, I'm going to try to do this right, Jelena McWilliams. Close. She'll be yelling at me. So the chair of the Federal Deposit Insurance Corporation, also known as the FDIC. I just wanted, before getting into an introduction of today's speaker, to take a quick minute to let you know about some of the other things that have been happening at SIEPR recently, just shining the light on a couple research things. So one of our visiting fellows, Marika Cabral, just published the most recent SIEPR policy brief that looks at the effects of reimbursement to private Medicare Advantage plans through which more than 20 million Americans get their health insurance. So I encourage you to check that out. It's hot off the presses. One of our senior fellows, Daniel Ho, recently wrote an op-ed in a publication, The Hill, about his work on the efficiency of benefit provision to military veterans in the US. And the research that he drew on for this was prominently cited in recent testimony during a hearing held by both the House and Senate committees on Veterans Affairs. And just 2 weeks ago, I gave a presentation during Stanford's launch of its new Institute for Human-Centered Artificial Intelligence, where I talked about the need to keep economic policy issues at the forefront as artificial intelligence advances in the months and years ahead. I could keep going on and on about all the great stuff underway here with our 105 faculty members and students and so forth, and so much of it happens thanks to your support. So I'm very, very grateful for all of your involvement and interest in what we do here at SIEPR. And I'm also happy to see a number of students here today, and hope that some students will have some questions later on. And I apologize, bear with me. I'm sniffly. I hope I'll try to keep them to a minimum. But I know all of us are really here today to hear from Jelena. So let me I'm very scared. So let me tell you a bit about her. She started her 5-year term as the FDIC's chair on June 5th, 2018. And on its website, under its mission, it reads, "The Federal Deposit Insurance Corporation is an independent agency created by the Congress to maintain stability and public confidence in the nation's financial system by insuring deposits, bank deposits, examining and supervising financial institutions for safety and soundness and consumer protection, and much more." So those are two of the, so I encourage you to go to the FDIC website where there are lots of things that the FDIC is charged with. And I'm hoping that all of you have read Jelena's impressive bio, but I wanted to highlight a few especially interesting facts. She was born in Belgrade, Yugoslavia, which is now Serbia, and arrived in the United States on July 29th, 1991 for a high school exchange program on her 18th birthday? Yes, on her 18th birthday. She stayed in the US to earn a BA in political science and mass communications with highest honors at the University of California at Berkeley, and a law degree 3 years later at Berkeley as well. And Jelena practiced corporate law in the private sector for almost 5 years, specializing in public offerings of debt and equity securities and mergers and acquisitions. She worked at 2 large law firms, including Morrison and Forrester, which I believe is, you could almost hit a golf ball here. It's pretty close to here in Palo Alto, just a little ways down El Camino Real. Her involvement with the banking industry began in 2007 when she joined the Federal Reserve Board of Governors as an attorney in the Division of Consumer and Community Affairs. She left the Federal Reserve in 2010 to serve as Assistant Chief Counsel for the Senate Small Business Committee, and moved to the Senate Banking Committee as Senior Counsel in 2012, eventually rising to Chief Counsel and Deputy Staff Director. Almost 5 years later, she left to become Executive Vice President, Chief Legal Officer, and Corporate Secretary at Fifth Third Bank in Cincinnati, Ohio. Jelena lives with her daughter, her parents, whom she brought to the US, and 2 rescue dogs, Jack Russell Terriers, Charlie and Leica, in Arlington, Virginia. I think that's right. So now on to some quick highlights from her time as FDIC chair, and she hasn't even been there for a year yet, but she's accomplished a huge amount. She came in with what many have called a bold agenda to review old policies, speed up the process for new bank applications, and help banks navigate the new marijuana laws. She announced a Trust Through Transparency initiative that provides FDIC stakeholders with the information and means to hold the agency accountable, including metrics on de novo banks applications, bank exams, and bank failures. She's overseen the creation of an innovation office to help banks compete with fintech, is committed to expanding access of the underbanked to the financial system, and has received a ton of positive press. And I think you'll soon see why. But I really enjoyed a recent Wall Street Journal editorial piece called America's Most Inspiring Bureaucrats that was all about Jelena. So I think we'll be hearing about how her personal story informs and drives the work she's doing today at the FDIC to support so many others in the pursuit of the American dream. So please join me in welcoming Jelena to SIEPR.
Thank you, Mark. So I have a mic and I can move. I don't have notes, whatever works best. But I joked when that op-ed at the Wall Street Journal came out and I was called one of America's most inspiring bureaucrats. I didn't swim across shark-infested waters and crawled under barbed wire to escape communism to be a bureaucrat. But so it happened, and if you're going to be one, you may as well be the most inspiring one. So thank you for having me tonight. Thank you, Mark. Lauren, where are you? I don't see you. Thank you. It feels strangely being in California, being in the Bay Area, feels like a homecoming. And I've been in DC for 15 years now. But 28 years ago, I landed at SFO with $500 tucked in the jeans pocket. And from Belgrade, then Yugoslavia. And someplace on that flight, I turned 18. I think I was over Nebraska. And now looking back, I'm trying to figure out the exact time of the flight, and I'm thinking. And I came on an airline that basically disappeared that year. It was Pan Am. I came from a country that disappeared that year as well. And I basically was here in the United States as an exchange student in Stockton, California. I know, thank you. I expected some sympathy about that. And I remember landing at SFO, my host family picked me up, and they, as we drove away from SFO, we went to San Francisco, and there were bright lights, big city, and I was thinking of the streets of San Francisco and many songs about the city. And then we drove over by Berkeley, and I was like, I saw Campanile, and I just said, I so badly want to go to school here. And then we drove over the hills, and there were the windmills, and I said, how exotic, Don Quixote all the way. And then we drove into the valley. I'm like, what happened? And somehow Stockton became my home for a long time. And I basically did, people tell me I have an inspiring bio. I did what I had to do to survive. And I took a little bit more risk, and I had maybe a little bit more guts than I should have. And I certainly had more guts than brain cells at times. But being in the United States, I was by myself. I lived with a host family for a few months. Almost a year, and during that year I had to apply to college, and I was down to $50 when my college application time came, and application to Stanford was $60. Application to Berkeley was $40. So had you been cheaper, I could have been here. Math didn't work to your advantage, and I sent one application out, and I got into UC Berkeley. And I went, and I drove. I couldn't afford to live in the Bay Area at the time, and I drove from Stockton, California, 80 miles each way. And what you do when you do that, you learn how to be resourceful, because when you show up at the parking lots at Berkeley are full, you learn that bringing cookies, bananas, apples, and occasional a chocolate, and giving it to the parking attendant gets your parking spot every day. So today, as I went to Berkeley this morning and I met with some students, I actually looked at the parking lot and I just smiled. And I was thinking, how many apples did it take for me to actually park here? I had a few dollars more when I was applying to law schools. And then I basically started out as an astrophysicist, thinking I'm going to do astrophysics, because back where I come from, you couldn't make it in life unless you were an engineer. Doctors did okay, engineers were exceptional, and lawyers were okay. Right, but it was really the engineers and the doctors that moved the world. And if you really think about it, I joke with my daughter, in a zombie apocalypse, I'm probably useless to her. I can yell at people, and I'm not sure that's going to get us far. Engineers and doctors will get something done, and I think she still wants to be a lawyer. I don't know why. But as the wars broke out in the former Yugoslavia, and I started learning history and understanding what's happening to the place where I came from, I started learning more about the political process, and realized that being an astrophysicist is fun, but being involved in the political process is probably more fun. And so I switched my major to political science. And at one point, I wanted to be an investigative journalist covering wars. And then a few of them died, and I said, not a good idea. Okay, let's go for something more peaceful. Let's go to law school. So I did. I applied to several law schools, and Berkeley was the best value for the dollar. I did. I went to Berkeley, finished Berkeley. On my second day at Berkeley, in tears, I walked over to Haas Business School, and I told them I made a huge mistake. I'm really a numbers person. I'm not really a words person. So would you please accept me? And they looked at me like, should we call a doctor? Is she okay? It's after I read the civil procedure case, and I didn't even think it was written in English. It was an old case from the 1800s, and it just completely demoralized me about the study of law because I was thinking, I just don't understand this. So fast forward, I learned how to practice law. I learned how to read court opinions. And, but I graduated with law school debt. And what do you do when you have debt? You go find a job that pays for that debt. And while I was going to Berkeley as an undergrad, I actually managed to pay for my education by selling Cutco knives, working at Blockbuster, the closing shift. I sold clothes at Lane Bryant. Do you know what Lane Bryant is? So I walked into the store and I said, I love your clothes. And I would love to work here because I love buying your clothes. I was clueless. They start at size 14. And they looked at me and said, you're lying, but you're hired. And so I worked, I sold cars in Stockton, California. I had one of those experiences. It was an old dealership that's been around in downtown Stockton, California for about 30 years before I joined it. And I had 3 salesmen working with me, and all 3 of them have been working there for, in the aggregate, over 100 years. And their names were Harold, Harlan, and Harry. And we bonded because nobody ever came to this dealership. It was in downtown Stockton. And one day I had Harold with a toothpick in his mouth pull me aside and say, you know, I want to help you out. And I said, okay, how are you going to help me out? And he said, I'll tell you this, if you don't lose your accent, you're not going to make it in America. And I said, okay, thank you. I think you just helped me. He didn't mean anything bad. He belonged to a generation where if you didn't look like you fit the mold, and if you didn't fit the mold, you probably couldn't really succeed. And I thought at that moment I didn't come to America to fit into a mold. I came to America to actually create my own mold, to create my own path. And if it can be done anywhere, it can be done here. And God knows I watched enough shows of Dallas and Dynasty to know that if you can make it anywhere, you can make it here. So I kind of took that advice and I said, I'm going to stay true to myself. Obviously, I can't lose my accent. It is what it is. I actually think my accent is pretty cool today. But it took some time to get to that conclusion. And I realized that car selling is probably not for me. So fast forward to law school years, I graduate. Now I need to get a job that's better than selling cars. And so I got a job at Morrison & Foerster, and you can't hit it with a golf ball from here. I don't care how good you are. It's about like a mile and a half, and Tiger Woods wouldn't be able to get it. But if you can, good for you. And I worked on the securities offerings and IPOs, and I was in the Valley, and things were exciting. And I hustled because this was post 9/11. And as you know, a lot of businesses were closing down. Venture financings have dried up. Banks weren't lending. We were in our initial recession, and you know, we didn't know until 2008 that recession wasn't as bad. And a lot of lawyers were getting fired. Offers were being withdrawn, so I just jumped on every deal that I could jump onto. And so I ended up doing a number of IPOs when IPOs were rare. So I was, I like to say that I did 10% of IPOs in the United States in a single year. Mind you, I was a low first year, second year associate. I had no idea what I was doing. They would tell me, go do due diligence, review the books and the documents. And I'm like, okay, what am I looking for? Just find anything unusual. I'm like, everything is unusual to me. I have no idea what I'm doing. So I was doing that, and then I went to DC for a conference. And I stood there. I had a break after a conference, and I went over, walked by the tidal pool, sat at the steps of the Lincoln Memorial, and looked straight down, and I saw the building of a Congress. And I said, this is where I need to be. And I looked at my family. At that point, it was my mom, my dad, a cat. The cat has died since. The 2 dogs are up for adoption. They shed so much, I don't want them. And I just came back to Palo Alto, and we were living in San Jose at that time, and I said to my mom and my dad, who I moved here, I said, we're going to sell everything, and I'm going to move to DC, and someday I'm going to work for a president, and I'm going to be consequential. And my dad, who was born in 1925 in rural Montenegro, almost starved to death during World War II. almost got typhoid. Okay, was barefoot for most of the war and hungry for the majority of it. Looks at me and looks at my mother and goes, "This is your fault." Who is this crazy daughter of ours who actually now wants to drop everything, sell a house she just bought 4 months ago, drop a job that's a phenomenal job at a good prestigious law firm and move to DC because she thinks she's going to work for a president someday. So 6 months later, 12 suitcases. It was 2 suitcases per person. My daughter, me carrying a car seat on my back, a cat in a carrier, a daughter here, my parents with a cane just walking the airport. I'm like, we are going to DC and we're going to rule the world. My dad still looks at my mom and goes, "It was all your fault." So I went to DC and I didn't know what to do in DC, right? And so I interviewed with a number of law firms thinking, I need to learn how this place works because I'm kind of a new here. And so I interviewed with law firms. I got an offer from several law firms. I took a job and I worked and worked and worked. And I think I billed 350 hours a month, months and months and months in a row. So in June, we were working on real estate investment trusts going private. This was 2005. We were working on a lot of going private transactions and private placements and just dying. And I'm sitting there in my office. The White House is, in Mark's speak, a golf ball away. And I'm thinking, what am I doing? I didn't come to DC to work on these types of transactions. I came here to be consequential. So I basically did something that people do out of desperation, and it never produces anything. I went to usajobs.gov, and I applied for a job. And the job was at the Securities and Exchange Commission. And I was thinking, I'm a securities lawyer, this should work. So they called me in about 3 weeks, and then they said, we are going to interview you for 3 different divisions. We are going to interview for the Corp Fin division, for the Market Regulation division, and we're creating an office of Division of Credit Ratings. This is post-Sarbanes-Oxley. And we're going to figure out where to put you. And then they started battling where they're going to put me, not because I'm good, or I was good, but because they were just trying to staff folks, and especially in the Office of Credit Ratings. But their internal battles took about 6 months. In the meantime, I'm like sitting there thinking, I need to go and fulfill my purpose in life and work in government and do public service. So I, again, go to usajobs.gov. And there was a job description that basically said this: Federal Reserve, looking for a consumer protection lawyer. Minimum 5 years experience in good law firms, looking for good law schools, doing consumer protection and financial services and banking regulation. No prior experience necessary. And I said, check the box, no prior experience, it's me. Have no idea what I'm doing. So I sent my resume in on a Monday, got a job on a Wednesday, interviewed on a Friday, and got a job offer on a Monday. And I basically said, I have no idea what the Fed does, but I'm taking the job. If they can move in a week, I'm in. So I took the job, and I was thinking, good, I'm going to learn how the government works. I'm going to have, a long time to kind of get up to speed with things, and I'm going to have a work-life balance I've never had. This was April 2nd, 2007. So I'm really good in planning, except nothing around me goes as planned. So I land at the Fed, and the first thing that lands on my desk is a subprime mortgage rulemaking. How are we going to regulate subprime mortgages? And so I start learning about subprime mortgages. The next thing that lands on my desk is interchange rates for consumers and putting a cap on interchange rates and learning how to regulate them. I'm like, all right, this is not what I signed up for. The next rulemaking that came on my desk was basically not even a rulemaking. We were dealing with hemp and harp on foreclosure efforts. And so we're fielding consumer calls, consumer calling to say, hey, I'm getting foreclosed. I had a lady say, I think my husband is suicidal. He lost his job, and we're getting foreclosed on. Can you help me? And you sit there as a new attorney in this space, and you say, I don't even know how to handle it. I mean, they don't need advice from a bank regulatory agency. They need a lot of hand-holding because this is epic. And I remember sitting in a Federal Open Market Committee meeting at the Federal Reserve in 2008 as the 12 regional bank presidents from the Fed were sitting around the table and talking about conditions in each of their districts. And me just sitting there, I was one of 30 staffers in the room just thinking, this is epic. This is I don't even know how to describe it, right? I'm this kid who came from the Balkans to the United States thinking this country can never go south. It can never go bad. Things are going to always be good in America because that's what it looks like. And yet I'm sitting in this FOMC meetings hearing about the collapse of the system. And it was a dire experience that shaped my philosophy going forward. Dodd-Frank passed, became the law, and a lot of my colleagues were going to the CFPB. And I did another thing that never yielded a job, but somehow yielded a job for me. I went to the Senate Placement Board. And there was a single job that appealed to me. It said a moderate Northeast Republican looking for a financial services lawyer to help with the implementation of Dodd-Frank. I was like, all right, sounds good, me. So I sent my resume, and they called me that day at 5 o'clock, and they said, would you come to talk to Olympia Snow? And I said, I love Olympia Snow. I'll come talk to Olympia Snow. So I did. They made me an offer on the spot. Hey, we love you. Your experience is phenomenal. Would you work with us? There's only one hiccup. I'm like, what's the hiccup? We can't pay you. And I'm just thinking my dad will look at my mom and say, it's your fault again. So the Fed was kind to detail me to the Olympia Snow staff, and I got to work with Olympia Snow on many issues, and I highly respect and actually love her. She's a phenomenal stature in American politics. I got to sit in meetings with Secretary Geithner when we were negotiating the debt limit increase for the United States. As a matter of fact, on my 20th anniversary in the United States, I was on the Senate floor until midnight. This was July 29, 2011, with Senator Snow as the Senate was voting on what essentially became a failed vote on increasing the debt limit. And at one point, she came to me on the floor, and we're not supposed to talk, so I said, Senator, I just want to let you know, today's my 20th anniversary in the United States, and I had somebody told me 20 years ago, when I landed here with $500 in my pocket, that I would be here with you today. I wouldn't believe it. I said, there's no place I would rather be. She looks at me and goes, oh, there are many places I would rather be. From there, I ended up, she was retiring the next year, and I had a chance encounter waiting for the Senate elevators, and those elevators were still dated, they're dated from the 1800s. So the time it takes to go from the third floor to the basement is like you can write a bill and probably pass it in the House, but not pass it in the Senate because that takes 5 floors. And so I was in the elevator with then Chief Counsel on the Senate Banking Committee, and he said, hey, you worked at the Fed? And I said, yes. And he said, Snow is retiring. You work for Olympia Snow? And I said, yes. He said, you want to work on Senate Banking Committee? And I'm thinking, yeah, but I'm not going to beg for a job. So sure, I want to work on the Senate Banking Committee. He said, come talk to us. So I did. I got a job on the Senate Banking Committee and worked for then Senator Shelby for 6 months. There was a change in new Congress. I worked for Senator Crapo for 2 years. Then Senator Shelby came back as chairman. I continued to serve on the committee. And then I got a call one day from a friend who basically said, hey, what are you going to do? Are you going to stay in the Senate forever, or are you going to go and do something more interesting? And I said, well, this is pretty interesting. He said, a friend of mine is looking for a deputy general counsel at a bank. And I said, not interested. And he said, would you please talk to her? And I said, nah, maybe. I'm really not interested. I love my job. And nonetheless, the woman asked to have coffee with me. We had coffee, and she said, would you please come to talk to the bank about working in the legal department as deputy general counsel? And I said, no. But she said, would you please fly out to Cincinnati and just meet my executive team? And if you like them, you want to take the job, take the job. If you don't, no bad feelings. And so I did. I signed up to go and talk to them. 90% sure I'm not taking this job. And on a Friday before I was supposed to fly out, I got a call from the bank saying that the general counsel position is now open, and they would love for me to fly out, and that the general counsel is no longer with them. And I'm thinking, I'm crazy, but these people are crazier. I'm not flying. And somehow I talked to my then boss, and he said to me, he said, no, you got to go. And when they ask you if you want the general counsel job in person, you're going to say yes. And I said, why? He said, because you don't know what you're made out of until you try it. And he said, my job is to push you out of the nest, and your job is to fly. So I did. I flew out to Cincinnati. I interviewed for the job I didn't want. They offered me the job that I wasn't sure I want, and because I thought that I always took the risk of doing something unexpected, I actually took the job, and I became the general counsel of America's 12th largest bank. And I was just fine. I moved my whole family to Cincinnati. Someday they'll forgive me. That day is not anywhere close. And I was fine. I was handling bank affairs. I had interesting exchanges with my executives. I'll share a few of them with you without talking about any specifics. And I think this is for lawyers, if we have any aspiring lawyer students here. This is something that's useful. If you talk to your CEO and he says something you don't like, you say, sure, that's fine, go ahead, do that, and just tell me what kind of a bread would you like for me to get you to prison. I also looked at, I won't say who on the executive team, and I said, if you run to the CEO's office with that idea, I will trip you. No, I will physically trip you. I also told my CFO, I am not your cost center. Stop complaining about the legal bills. We need to have the compliance regime in place, and we need to do what we need to do because we need to do it. We are a regulated entity, and don't complain. If you didn't make mistakes, I wouldn't have to pay for them, so it's all your fault. And somehow they still kept me. I still somehow had this job and had as much fun as you can have working for a regulated entity. When a call came up one night and basically said, it was very late in the evening, and a call came and from somebody working in the White House and said, hey, people are floating your name. Would you like to run the FDIC? Sure. So you want to think about this? No. Are you sure you want to think? Well, wait, if you're asking me if I'm sure if I want to think about it, then there must be a catch. So should I be thinking about this? Well, no, but you have a great job. You know, you're the youngest CEO of top 20 banks in the United States, and you know, you have a lucrative career ahead of you. And no, I said, I want to go back to public service. I will always take public service over a corporate job. And not because I don't like money. Apparently I don't, if you ask my dad. He's still convinced that I'm crazy. But it's my mom's fault. And I said, no, I'll take the job. If it's offered to me, it would be my honor to serve. And so I did. I went through the FBI background check. Folks don't travel. I've been to 60-plus countries, and I can tell you that that prolongs your FBI check. Why would you go to 60-plus countries? Well, because they're there. Not a good response for the FBI, so you have to explain where you went to every country. I don't know, they have snorkeling, and it's fun, and they have hiking, and that's fun too. Somehow we got through all of that, and I had my confirmation hearing. And so what happens when you go for a confirmation hearing, you're supposed to go and meet with all of the senators on both sides of the political aisle on the committee for which through which you're being confirmed. And so I went, and I was my own Sherpa. Usually people take other, experienced staff from the agencies, and I said, no, I'll just Sherpa myself. I worked in the Senate, and if I can't put myself through this process, you shouldn't hire me for this job. So I did, and I remember talking to senators. I had one senator tell me, hey, are you here by yourself? You don't have anybody escorting you to this interview? I said, no. I said, I like to cut out a middleman. They said, confirmed. I had another senator ask me, are you going to be one of those lofty regulators who shows up and just talks and doesn't do anything? And I said, Senator, touch my hands. And the senator looks at me and I said, no, go, feel my palms. And he did, and I said, these are working woman hands. I said, I clean my own house, I fix my own dishwasher, I walk my own dogs, and I do everything I can around the house for my parents. I said, if you're looking for somebody who's going to be lofty and mighty in this position, it's not me. I roll up my sleeves and I go down in the trenches. He's like, oh crap, she's getting confirmed. You can imagine whose party that senator is from. So I got through the process. I got confirmed. I got 69 votes, and I'm still mad at 7 senators, 6 of whom are Republican, because they were at the White House for a bill signing ceremony. And there was a gridlock on Constitution Avenue, and they didn't make it in time to vote for me. So I'm sitting there because I was really, really, really trying. I told Jay Powell at the Fed, I said, I'm going to beat you. And I didn't, because he got 70-plus votes, and I got 69. So I know the names of those 6 senators, and I will get even. So that's how I ended up at the FDIC. And Mark asked me to share a little bit of my story. This is probably more than you wanted to hear. So I'll give you a couple of advices to the students who are here and who are looking for career choices. Pick your careers wisely. Do what you have to pay off your student loans. Live within your means so you can pursue your passion. And find what drives you. And whatever it is that drives you, just go and do it. Life is too short. And I took a chance every time. Every time I jumped off the cliff, I had to financially support 3 other people, my parents and my daughter, the dogs later too. And so I had to be sensible about my choices, but I also knew that if I'm not consequential, I'm nothing. And that's just who I am as a person. And so figure out what it is that drives your career and your passion in life, and then just go do it. Spend 3 to 5 years doing what you have to do to pay off student loans and establish yourself. And then after that, just go find your passion and just go and do it. And it's okay, you can jump off the cliff. And if you don't know what's on the other side, that's okay too, so long as you know that you will land. And what's on the other side doesn't matter if you know what's inside of you. So go get yourself to the point where you collect every tool you can, so you can get to the point where you're very capable and very resourceful, regardless of what's on the other side, and then just jump. So with that, I'm happy to take questions and we can engage. Thank you.
That was terrific. So yeah, a lot of bold moves. So how long
Crazy
were you in?
moves.
How long were you in?
18 months.
18 months.
Yeah,
Okay.
yeah.
Wow. So
My parents counted the days.
I see that I have a few of my students from Econ 1 here, and I taught Econ 1 last quarter to about 250 Stanford students, and one of the things that we cover in Econ 1 is the FDIC, and I talk a little bit about what the FDIC does, so I am in front of them now, and I get to ask you if what I told them is correct.
Why don't I ask them what you said, so we can
I don't know if
test
they'll
it.
remember. So let's. I don't want to put them on. We'll put them on the spot another way. But one of the things that I said is that the FDIC. So all of us put money in a bank, and there are requirements about how much the bank needs to keep in reserve, and some banks might decide to push the envelope a little more than others and loan out more, and others may keep more in reserve. But those decisions will influence the premium that they pay to the FDIC for their insurance. So did I get that right?
Sure. Yes, you did.
Can you talk a little bit about that process?
Sure. So the way it works, our regulatory system, and I'll just be very frank, is rather fragmented, because it's not a system we kind of landed, in a new place and said, this is what the framework should look like. No, the system evolved over time. And if you really think about it, when I talk to Europeans about their regulatory system in the banking world, I tell them, you understand that for all of our longevity in the United States OCC has been around since the 1800s, the FDIC since 1933, and the Fed, et cetera. And for all of the longevity of these institutions, 100 and plus years in some cases, we didn't really have intrastate banking until the 80s and 90s. It's kind of a young, if you really think about it. So the way that our financial framework evolved is that you have 3 primary regulators for banks. You have the FDIC for state chartered banks that are not members of the Federal Reserve System. You have OCC regulated banks, which are national banks. They can operate on a national platform. And you have state member banks, meaning state banks chartered in states that operate in a single state or more states. In each of these states, they get a license, and then they pay dividends to become members of the pay into the Federal Reserve System. So then we regulate on the FDIC side all of those banks for the deposit insurance. And if we think that the bank is undercapitalized or presents a higher risk profile, their deposit insurance rates, premiums can go up.
Great. And you have a trust fund now, because things have been pretty good, right, in the banking industry? So there haven't been a lot of...
We have not had a failure in a long time. We did not have a single failure last year. So we're looking at 16 months. But this is what I tell people, this is not normal. Right? We work in a free market economy. This is the forces of the economic forces work in such a way that somebody fails, somebody succeeds, and it's okay. It's okay to fail. And so not having a single failure is a sign of good economic times. It's also a sign that we have gone through the tranches of bank failures, and the banks that were unstable have closed down, and we're now in this kind of a new cycle of no failures for quite a few months.
Great. Okay. So did a little research ahead of today and learned that, so I think FDIC has about 6,000 employees. And I'm wondering now, you've been in the position for about 10 months. What would you say for the FDIC, for those 6,000 employees, for the organization, what are the new priorities, would you say? Or what things have you put sort of at the top of your list in terms of priorities for FDIC?
So one of the first things I did when I came to the FDIC, I started a Trust Through Transparency initiative, and I've learned not to say trust through transparency too quickly if I had a glass of wine. It's a tongue twister. Basically, I asked staff at the FDIC, we were talking about different policy matters, and I said, are we making this information available to the public? Right? Being a regulator puts you at a heightened level of public scrutiny. And from my perspective, I don't believe that anything should be secret. We have to protect confidential supervisory information. We have to protect privacy of the consumers that are affected by by our financial regulatory system. But really, truthfully, I think the regulators should be putting out more things for public to take a look at, more economic data for economies to take a look at and research and basically challenge us. So we started this initiative where we're posting more things than we have ever before on our website to hold us accountable about how we do work. And if you get a chance, just go to the Trust Through Transparency initiative. We get about 10,000 hits a week, a month, and we have about 50,000 unique visitors, and I only have 6,000 employees, so I know that at least 44,000 are not my employees. And then I heard somebody said, well, maybe my kid could click, and I was like, no, please don't do that. But it's something that I'm hoping other agencies will follow as well. We're trying to take a new look at the way we draft regulations. Quite often, a lot of that work is done kind of in a black box setting, and I'm trying to bring more transparency to that process. We have rules that have been promulgated 20, 25 years ago and not looked at since then, and the world of banking has changed. You know, you couldn't take a picture of your check and deposit it even 10 years ago, and now you can. So our rules, we need to be modernizing our rules and how we approach banking regulation.
Great. I'm going to ask a couple more questions, and then I'm going to open it up. I've got tons of questions that I can ask, but I want people here to be thinking about questions they may have too. So about a month ago, the FDIC announced record profits in the banking industry. I'm curious to hear your thoughts on what led to those, and if they're and going forward, if that influences your thinking about regulation in this area.
Sure. So we do a quarterly banking profile. Basically, every quarter we take a look at the call report data. Call report data is what banks have to provide. It's an extensive report that banks have to do on many fields, and it's a great tool for the economists. And we aggregate the data. We take a look at the state and the health of the banking industry and see how folks are doing. And yes, we came to the point to a conclusion that the banks have experienced record profits. For a lot of small banks, this has been the most profitable period in their history. A large part of the profitability was driven by the tax changes, and another large part of the profitability was just driven by economic changes. We're in the increasing interest, or we were at least in the increasing interest rate environment, and they could finally offer CDs at different rates and earn more on interest rates, and so that's basically what drove the profitability.
Great. Another topic that I hit on a bit in Econ 1 is payday loans, and you've, I think, been a proponent of more banks getting into this space through small dollar loans, and I guess maybe they're not, you wouldn't call them payday loans, but the dollar amounts might be similar. Can you talk a little bit about what you see as the obstacles to banks doing more in this space, and do you expect banks to get more involved in this area?
So my goal would be for banks to get involved in this space, and here's why. There are consumer advocates who don't believe consumers should be getting these types of loans because they're living above and beyond their means and they can't manage credit. And all of that may be true. But at the end of the month, when their car breaks down and they need to make it to work, they need money from someplace, and they're going to find ways to get that money. It's usually $500 or, I don't know if you've seen the Federal Reserve study that said most of American households don't have $400 in the reserve for emergencies. So there is a need for this type of a product, and consumers are going to find ways of getting this regardless of where it's offered. And I think if we can bring it back to the banks, I believe we can protect consumers better, because we regulate these banks. We can see if they're complying with the consumer protection laws. And frankly, if you really want to talk about consumer protection, on a regulatory side, as federal regulators, we can't regulate those loans being done outside of the banking sector. So my goal would be to bring them back to the banks and be able to regulate them and make sure that consumers have fair access to those products while also driving competition and cost down, competition up and cost down.
So if you had to say, mention that banks have been doing pretty well lately, and the economy, I'm still very happy. We see the unemployment rate coming down, pretty flat. Things seem good, but just generally, there will be a downturn at some point.
At
And
some
do you
point,
think the
yes.
banking sector is pretty well prepared for a downturn?
If you take a current snapshot in time, yes, they're well capitalized. The banks for which we're a primary regulator, which are primarily small banks in the United States, they're doing superbly well, and they have high capital levels, and most of their portfolios are able to withstand an economic downturn.
Okay, great. So a few weeks ago, we had a session at our annual economic summit on the cannabis industry. And one of the things that came up in that session was the challenges for, I don't know, banking in this space, if you want to deposit money into a bank. So can you just talk a little bit about what the legalization of recreational marijuana in some states has, how it has affected what the FDIC does?
This is when somebody should crumble paper so I can get out of here and say, no, I can't hear you.
All right.
So it's a tough question, and I'll tell you why. And this is probably going to make me the least popular person in California. On federal law, on federal level, the federal law is very clear. It's an illegal substance, and banks should not be banking marijuana businesses. However, the majority of states now have some kind of a cannabis law in place, marijuana law, that makes it legal for either legal dispensaries or medicinal use or some other form of use. And so you have banks that are in a very, very dire strait here because they have federal regulators who are telling them we have to follow the federal law. However, in states in which where they function, the products may be legal. And so I've heard from a particular state, several banks, in this state, to get a dispensary license costs a very specific dollar amount. I want to say it was like $2,085.37, a very specific dollar amount. And so the bankers came to us and said, listen, in our state, if there's an ACH transaction for $2,000 and this exact amount, we know what's going on. This is a dispensary looking for a license, and what do you want us to do with that? And so as a federal regulator, I'm supposed to say, don't do it. However, we need to create a framework where these institutions are not caught between the federal and state law and then not paying the regulatory price later. So I tell them always this, FinCEN has a guidance on dealing with marijuana-related businesses. And it basically says, if you have a transaction for which you suspect that it could be a marijuana-driven transaction, right, go ahead and file a suspicious activity report, so-called SAR. So, and I tell bankers, go ahead and file SARs. And so here's the irony of all of this. More I talk about this, people are like, hey, she likes talking about pot. And I'm like, no, I don't. I'm just trying to do something. And so I know Chris Giancarlo at CFTC, who likes to be called Crypto Dad. I know Hester Peirce at the SEC Commissioner at the Securities and Exchange Commission, and she's somehow known as the Crypto Mom. And I'm thinking, here comes Jelena McWilliams, the pot chairman. I mean, this is like just not comparable. I don't like this. But, I think it's important for us to talk and highlight that we're putting these businesses in a very, very difficult predicament where they don't know how to comply with the federal and state regulations. And there was a so-called Cole memo from the Department of Justice that said, don't do it. And I talked to FinCEN Director Ken Blanco, and I said, can you please give my banks more guidance? He said, listen, it's illegal at the federal level, follow the FinCEN guidance. So it's one of those regulatory just puzzles where you tell the banks, just here are the tools for you how to do this, and I'm not telling you what to do. Right. Just if you're going to do something like this, this is how you do it.
Okay, great. All right.
This is why I'm not going to be popular in California.
Okay, so with that, I'd like to open it up for questions from the audience. We have one right here. So we only have a certain amount of time.
Okay, well, this one is for you, Mark.
Oh, it's for me?
Yes. Just a comment. You're wrong, and Jelena right to
the
tell you that you're wrong. There's a difference between reserves and capital. She was talking about well-capitalized bank, and you were talking about reserve requirements. That's different.
The network.
Reserve requirements are for the ATMs with the Fed. Capital requirements are about their solvency and insolvency, or whether they can actually,
Is this a question?
pay their Yes, there is a question. So I just want to correct that for all the Econ 1 students who are here.
Okay.
Clarify
We'll do a
that.
regrade for all of you. Yeah.
Clarify the difference between reserve requirements on the asset side, whether you have cash in a
Yeah,
locked
okay.
somewhere versus whether you are funded with debt versus equity.
Thank you.
And there's where the FDIC comes in. Do you can you pay your debts? That's where the FDIC should come in. So anyway, my question for Jelena was really about the FDIC as being known for it being. I mean, I think they have an acronym for it: forever demanding increased capital or something like that. FDIC.
We have many acronyms. I'll go with that
This
one.
is
yes.
one of them, and it's sort of based on Sheila Bair and Tom Honig and people like that who've always been fighting that fight. So I know you want to have your own legacy, but will you have that legacy too in the FDIC?
No, thank you. And Anat and I talked about this, and I said, you know what, Anat, I didn't crawl under barbed wire to escape communism. I didn't do that, but it sounds good. So that I would follow in somebody else's legacy, and I'll create my own. But I'll entertain you with this. I talked to Sheila Bair when I first took the job, and I said, Sheila, no matter what I do, I'm not going to have a building named after me or the largest auditorium named after me. And because we have a building in Virginia, in Arlington, FDIC has a building that's named after Bill Seidman, who was the chairman in the 90s, and we have the largest auditorium in that building named after Sheila Bair. And I said, no matter what I do, at the end of my 5 years, it's going to be like level 2 parking lot, the McWilliams parking lot. And she basically said, Jelena, just remember, both Bill Seidman and I had a crisis on our hands. And so I said, well, if that's what it takes to get a building or not, I'll take the parking lot. I'm okay with that. Just so long as I don't have to deal with what she dealt with. No, I have utmost respect for Sheila Bair and Tom Honig, and each of us has to carve their own legacy at the agency. Yeah, thank you, Nat.
Can you talk? Okay, so we've got another question. Oh, right here. Sorry, David, and then here. Yeah.
First of all, thank you for being here and sharing your story of immigrating to the U.S. It makes me proud to be an American. And
makes me proud to be an American too.
So what keeps you up at night? Is it the inversion of the yield curve where banks aren't making enough money? There's too much corporate debt. Certain cabinet folks talking about the Fed lowering interest rates. What worries you the most that you're facing today?
So it's a fair question, and thank you. And it's a question that probably warrants more of a discussion than we have time. As I spent enough time in DC now, and for better or for worse, I had a job at the Fed at a very difficult time, and I worked in the Senate under not optimal circumstances when bipartisanship was quite a bit gone, and we were constantly kind of putting out fires and trying to work across the line for the better of the United States. And so I've learned how to handle these questions and these situations and how to read through the comments and say, nope, not concerned. Oh, yes, very concerned. And what keeps me up at night, to be very frank, I worry about cyber quite a bit. And here's where I worry about it. I don't so much worry about the big banks because some of those very large institutions, they spend more on IT than is the budget of most federal government agencies. Just think of that. The budget for the FDIC is about $2 billion. And I know at least of 3 or 4 banks that spend more annually in exponentially more than that on, and we're not a small agency per se. So I worry about small banks and them being a part of the financial system, and if you really think about it, they can't. The economies of scale don't work to their advantage, and they can't spend as much on IT, even proportionally, as some of the larger players in the banking world. And if you think about a cyber attack and a bad actor getting through a community bank to the Fed wire, they will have access to the system. Okay, they could, and when we talk about these scenarios about bank failure, resolving a bank, and all of that, you kind of have to think about what happens if a large cyber attack blocks everything at a bank. And so a lot of these banks have backup servers. Well, what happens if it attacks the backup server too, right? So you think about this because you know how no matter how much you prepare on capital and liquidity and resiliency, and you put layers and layers and layers of rules, and they have good management, and you kind of you go through everything with a microscope and a magnifying glass. Something like this, if you're not prepared, can wipe out a bank pretty quickly. And that's something that no matter how much you prepare, something can always come out of the left field and disrupt. So I think about that. I also think about what kind of a regulatory framework, financial framework and banking do we want to have in the United States. We have had this tremendous consolidation of banks in the United States. And if you take a look at the chart that shows, we had this many banks and then now we're down to this many banks, and how many of the very small banks were absorbed by much larger banks. And I think about it, and when I started law school, there were 7 accounting firms, the big 7. There are no more there, right? And so are we going to come to the point in the United States where we have 7 banks? And I'm exaggerating, that's not going to happen. We have about 5,400 now. But as I drive throughout, different communities in the United States, there are 122 counties in the United States that don't have a single banking branch. There are counties, and I want to say there are 600 counties that have a single banking branch. And what happens in a lot of those rural communities, and you don't have to go far. If you drive down 101 and I-5 and go to Bakersfield, Modesto, outside of those areas, you go to those counties, the economy gets devastated if local banks close down. It's bad enough that big businesses have left some of these communities and that the unemployment is disproportionately high. But now what happens if that one financial institution closes down and doesn't fund, the local church and the school activities and the library, and all of a sudden you have the dying of the community, and that's something that I think about as I have 5 years in this job, and what kind of a legacy do I want to leave behind? And all joking about the parking lot and auditoriums and buildings, the legacy I really want to leave is that I made the system more resilient. I encouraged competition. I created entry points for new institutions to enter the marketplace and offer products and services to customers in these communities. And how can we do that in a way that makes them viable, and how much regulation do we need to make that happen, but not drown them with the amount of regulation? That's what I think at nighttime. But mostly I just collapse because I'm so tired.
Okay, next question, I think, or yeah, right here, right, yeah, student, yeah, great.
Hi.
Hi.
Thank you so much for your talk.
Thank you.
I was in Professor Duggan's Econ 1 class, and there was a unit on pollution and the intersection between economics and pollution. And I was just curious as to how human-led climate change, how you interact with that, how the FDIC interacts with that, and whether that's something that's become prominent in your job.
So not so much for the FDIC, and I'll tell you why. You will find more of the impact of that with the probably Securities and Exchange Commission in the disclosures and how much are companies forthright about their activities impacting the climate, et cetera, et cetera. From the FDIC's perspective, as we regulate banks, we kind of constantly look at general economic factors, and so we don't kind of focus in on pollution per se because it would be outside of the realm of banking regulation. But you do try to look at, trades and tariffs, and you look at kind of a general economic activity. You look at Brexit and you say, hey, what is this going to do to the banking industry? Should I worry? You look at political changes in different countries and what does this mean? And you look at foreign remittances, and you kind of focus on those macro and micro elements to try to figure out the big picture and how our institutions that we regulate focus. And from the perspective of the climate change, I mean, that's something that I think for the purposes of banking and financial services regulation would be more so in the SEC disclosures in their 10K and 8K filings and the Qs. But from the FDIC's perspective, thank you God, I don't have to think about that too. I do when I walk out on the street. When I'm in the office, I don't so much. Yeah.
Great. We have another question right here, and then other questions over here. Yeah, next. Okay, great.
Hi, thank you for your comments. Your advice for student loans was a very good one, to work 5 to 6 years to pay it off. But for many students, that won't work, and the accrued interest can often be larger than the original loan, and the interest rate is much higher than the growth of the economy. I know this doesn't come under the FDIC, but from your broad experience, what advice would you have, or what comments would you have on resolving this very important credit?
So I'll tell you what I told my daughter. My daughter is 17, and she's going to be looking in colleges and majors, et cetera, et cetera. And I told her that sadly, not all majors are created equal in terms of what kind of a job you can get after this. And I remember at some point in her young life, I said, if you want to do something that is not going to provide a sustainable path for you, down the road, maybe you make it into a hobby, and maybe you study economics instead. So I'm trying to steer her to your Econ 1 class. I look at the issue of student loan debt and the economy, and we had Sheila Baer comment on this quite extensively in recent months. It's stifling growth because, frankly, we have students that are burdened with a tremendous amount of student loan debt. My decision which law school to go to was driven purely by how much debt will I accrue when I leave. And luckily for me, Berkeley was a very good law school, is a very good law school, and highly ranked, and ranked as high as some of the by far more expensive schools. So I was like, easy decision, right? But I have to ponder for students who don't have that choice to go to a relatively inexpensive state school to get a good degree. What does that mean for them? It's also worth mentioning that most of that debt is federal government debt. So it's not just the students' debt. That we're worrying about what impact will this have on taxpayers, and we're looking at 1 point something, the number constantly changes, $1 trillion in student loan debt. So I look at that, and we certainly spend a lot of time thinking through those issues. We have done a lot of research on economic inclusion and financial services opportunities for young folks entering the workforce, and it's something that we struggle with, and I don't have a solution. But it is something that I'm highly cognizant of. I'm actually trying to make a little bit more of an outreach to go to talk to universities and talk to students and basically say, listen, get a job, figure out what degree will you like doing this, and you can get a job that pays, and then spend 5 years eating ramen and rice, okay? Do what you got to do. Pay off that student loan debt so that, 3 to 5 years out of your degree, you have an ability to basically pick a job you love. So just go do it for 3 to 5 years, do what it takes, and then pay off your debt and move forward. Public service is a great way to actually offset some of the debt. A lot of a lot of colleges have forgiveness programs for public service. So I think it's a fair thing to offer, given that the salaries for the government employees are not that high. As my dad likes to remind me. And anyhow, other than that, I'm just thinking of the opportunity of these young people coming out to buy a home or, buy a car. And, we have turned into a consumer economy, right? So if they can't spend, the economy won't grow in the same way that it has grown. And so it's not just a single student or just a student debt issue. The issue is by far more convoluted and complex. If you have a good suggestion, I'll take it.
One final question, Professor Van Horn, then we'll wrap up.
I'm over here.
Hello.
In the past, the FDIC has evaluated banks according to a 5-point scale, 1 through 5,
Yeah.
5 being out of business, basically. Could you give us an idea, the CAMEL rating system, of what's happened since 2008 with respect to the proportion that are 3, 4, and 5s to lower rankings?
So the so-called CAMELS ratings, and apparently has nothing to do with camels themselves. It's capital, assets, liquidity, earnings, management, and sensitivity to market risks. Those are the categories. So that makes CAMELS. And S was added. Wasn't there before, so it used to be one camel, now it's many camels. You pick the number of camels, but each of these categories gets a ranking between 1 and 5. Everybody wants to be 1. This is the case where 1 is truly the best. If you get, as the professor noted, if you get to the point of being a 5, we're probably sending a team in to look at how to prepare your bank for a resolution and hopefully a sale. While you're still open as a bank. And so the CAMELS ratings have evolved quite a bit. And I have been pushing at the FFIEC, the Federal Financial Institutions Examination Council, for a comprehensive review as to how we look at the CAMELS ratings and whether the 3 agencies, the federal banking regulatory agencies, the Fed and the OCC and the FDIC, approach the CAMELS ratings uniformly. And can a 3-rated bank at the OCC do the same things in terms of opening branches, merging, acquiring, expanding its business as a 3-rated bank at the FDIC or the FRB. And the numbers have, you're asking me a question that's difficult to answer because we're again in the best of times. So we have a sizable number of the 1 and 2 rated banks. One is truly, we don't have, it's not one, hardly anybody has 1 for all 5 categories. It's like 1, 1, 2, 2, 1. You know, so it's not a uniform one down the list of the categories. But the number of 3 and 4 rated banks has significantly, I would say 4 has significantly diminished. And 3, I think, is about, I don't have the numbers in front of me, but it's about the same as before. And mostly because we work through the problem banks. The problem bank list has shrunk down quite a bit. More than 500-something banks are no longer in existence. Those were the banks that would have been 4 and 5. So that category got cleaned. And we're now in the kind of a new, I don't want to say new normal, but in the new kind of a sizable portion of 1s and 2s. And I think if you go to our Trust or Transparency, you can get a little bit more of a sense of how many institutions fall generally in those categories. We don't give the exact numbers. I actually have to check if we're giving the exact numbers because we're concerned that that may undermine the confidential supervisory information. But we do have some indication as to what percentage of institutions falls in these categories. But I would love it if we could just have a comprehensive look at our CAMEL system and see if it's appropriately calibrated for the current time, because banks have changed.
Well, if there were a CAMELS type system for speakers, you would be 1s across the board.
Oh.
So please join me in thanking Jelena
Thank you.
McWilliams.
Thank you.